Hi, everybody. This is Gary Demas, Sentiment Timing, and this is our technical video report for Sunday, August 10th, 2025. Hope you guys are having a fantastic weekend, and let's get started. In the newsletter, the premium report, I had said that volatility is here, and we're really seeing it where we had this big drop, then we had a gap up, came back down, and we're just really, it's a bullish stage right now because we're making higher highs and higher lows. But you could just tell by the volatility right now that things are getting a little dicey. And as I said, I'm not bearish on the market. I'm market neutral. But I just don't want to be hanging on to any positions right now heading into where we are because things are just they're too elevated right now. And I've been doing this for over 30 years, and whenever you start seeing the hardest trade is not to be in the market right now, which I'm starting to hear, it throws up red flags. The only thing that I'll give the bulls on this is the NIAID sell signal that I've been showing you. It's trying to work itself out. So it doesn't always have to be a sell signal to get a larger move, but it's a pretty good, long-term indicator, or intermediate term, I should say. So if the bulls fix that, it'd be tomorrow. Then that's going to be off the table. But we still have, the bearish divergences in place, even though Friday was a strong day for the bulls. We had one little dip, and we had this move up. So right around 10:45, the S&P moved from 63.90 down to 63.67. So it was a nice little pullback, and then from there we just kind of grinded higher. So the bulls are in control from start to finish. That's it. There's nothing we could really say that wasn't good on that part of it for the bulls. But we do have some bearish divergences on the 15-minute chart. And on the 60-minute chart, like I said, this was a pretty strong move right here, where we still have bearish divergences. We're overbought, but we really just have to look at the numbers and the lines in the sand here. So obviously the bulls are going to have to get it back above the 64.27, and the bears are really going to have to, in my eyes, they're going to have to get it through this level right around here, because we'll have the moving average that's moving up, so it's going to be price support as well as a moving average. So it could be anywhere. We could come down here, anywhere between this area, the 62.70 up to the 62.97. So this is the wall that the bears need to get through. If they do, then I think we come down and we take out these lows, and something bigger will be starting. But until we see that, because every time we've seen this test this 6,200 level, buyers have stepped in and they push this market up. So it's it's a bullish stage right now. I'm just a little skeptical. That's it. Like I said, I'm not recommending shorting anything. I'm just saying be conservative. If you're long this market, have stops in place. But the only problem with stops is that if we get a big gap down day, your stop is going to be useless. So I'm taking the more conservative route, and like I said, we made some great profits on the quantum stocks that we had, and I just moved the cash. How I'm trading the markets is on a day-to-day basis, but as I said, I'm just a little skeptical right now with things. So if the bulls can get it above here, then what we have to keep an eye on is going to be hang on one second, let me just make this bigger. Okay, so if they can get through this level, then we're looking at a test of the all-time highs again, which is going to be the 64.36. So it's got a little bit of work to do to get there, but it's within spitting distance. And if we're lucky, what we'll do is we'll get that gap up above it and get the gap to new all-time high trade, fade trade in play, and sell call premium pretty early on within the next first 15 minutes of the market. But if we don't open above this, then we just have to keep an eye. If they get above that, the previous highs, the 64.36, then this is the wave structure that I'm looking at. This was just a wave 3 here, and that was our 4, and now we're making a wave 5. So if they hold it down and then momentum on the downside picks up, then we go back in with the red count here and say, oh, sorry about that. we come down and say that we have the regular wave structure that I showed. The one, hang on, let me get this better here. Okay, so 1, 2, 3, 4, 5. So that's the bearish case. There is that we already made the wave 5, but this is getting pretty close to taking that out. So the blue would probably come into play if that does. And then again, like I said, I'm just not sure it's going to be. I think it's going to be pretty short-lived because there's a lot of people. Even I know, a bunch of hedge fund managers. I know people that are on the street, and they're all kind of saying the same thing. Just, they're not adding any new money into the market for their clients, and really just riding this out and waiting for something to happen so they can buy out on the cheap. And that's really the way that I'm going with this as well. So daily chart, we have the bearish divergences here. So was this one-day move? Did that cover this? I don't think so. And what I think will happen is if we make another new high here, it's just going to extend the divergence. And again, from there, you're playing with fire because when you have daily divergences or sell signals, typically we get a lot more of a move to the downside than we saw last Friday. So, and again, if they take these out, really, we just go by even numbers. So you can go 64.50, 60. It's really kind of hard to say because there's nothing we really have to compare it as far as for resistance. So if they gap above it, then we have the fade trade in play for the morning. Again, that's going to be looking for this gap to get filled within the next 2 days. It's working pretty much at 100% right now, but we have to gap above the previous highs. That's the only way this gets triggered. So, again, downside, let's just say the first area let's go back to this. Let's go to shorter term charts. This will help us out. All right. So first line we have to really keep an eye on is going to be right here. The 63.68, that's almost matching up with the 63.30. If it gets below that, that's where we look for this gap to get filled at 63.40. And then we're keeping an eye on the 63.10 and then the 62.88. Again, upside, here's some resistance right at 64.03. Above that, you can call this resistance, 64.20. And then we have the previous highs are at 64.27. So let's see what plays out tomorrow. I think the futures will give us a pretty good idea what Mr. Market has in mind. Enjoy the rest of your weekend, and I will talk to you guys in the morning.